Yo, check it out, I gotta speak the truth about the hardest working small channel in the crypto booth.
Welcome back to the Crypto Father channel. I am the Crypto Father. Today is the 6th of August. Markets are looking horrible. I have no idea what's happening. I don't think anybody knows what's happening. I mean, most people know why it's happening, but it's just hard to bear. The destruction and the greed and fear are just shocking, man. It's painful again, and there's a lot of uncertainty that's creeping in right now. Quick look at the markets. $1.9 trillion. That's huge. It's a massive dip. Like literally we went over 2 months, I think 2 or 3 months, and we lost somewhere within $400 to $500 billion in market cap on the crypto market. $311 billion in trading volume. That's way up, and it's shorts and longs. There's a lot of people getting liquidated. Bitcoin lost another 19% in 7 days and 7.5% in 24 hours. It was trading as low as $49,000 or $48,000. Huge. I mean, if you picked up some Bitcoin at those prices, then you're in the bank right now. But Ethereum is at $2,400. BNB back down below 500, Solana at 132. Everything's in the red. It's scary. Cardano at 31 cents, 9% lost in the 24-hour period. Polkadot at $4.20, and Litecoin is at like $56 or something like that. Yeah, spot on. Litecoin $56. So yesterday we were looking at the charts, and I was talking about Bitcoin possibly going down to $50,000. Hello, and then it dumped all the way down to 49. I did talk about another possible support that we could see, I think, here at 48. I didn't draw the line, but it almost touched this line right here. Like it almost touched it. So that's where we're at right now. Bitcoin dumped massively. It retraced back up. So on the daily, we are at we've got 3 hours left before the daily candle closes up and a new one opens up. So hopefully this tide turns, because right now it's looking mightily scary. And a big chunk of that falls on the lap of, well, I mean, there is a lot of other stuff that was happening with Germany, and it looks like I saw somebody post a comment somewhere that Germany sold the top. There was a lot of people hanging cows and hanging a lot of blame on Germany for selling Bitcoin, 50,000 Bitcoin. But they seem to have sold at the top, because Bitcoin dumped significantly after that event. And so right now everything is in the red, but there's a lot of other stuff. There's Japan, there's Warren Buffett, who's also dumped a huge share of his not crypto obviously, but his stocks. And then there's also, I think everybody keeps forgetting about Mount Gox. I made a video on that and didn't get a lot of views because YouTube does not push my content out to anybody. I got subscribers telling me, who are subscribed and have the bell notification on, telling me that they're not getting notifications for my videos. So make sure to smash up the likes on this video, subscribe to this channel, and share the content, because YouTube does not do shit for it. And probably because I use the F word, the F-bomb in the videos. Maybe that's why. Forget these flakes. Senator Warren pushes CFTC to finalize ban on political betting. I didn't know that there was betting. Apparently, Senator Warren and colleagues sent a letter to CFTC Chair Royston Banham, or Banham, whatever, calling for the banning of political event betting contracts. The lawmakers argue that betting on elections undermines the sanctity of the democratic process by raising up financial calculations over political considerations, allowing billionaires to wager extraordinary bets while simultaneously contributing to a specific candidate or party, and political insiders to bet on elections using non-public information will further degrade public trust in the electoral process. This is absolutely ridiculous. Like, these people are like, yeah, I'm betting on this guy winning, and then I'm going to give him money to make sure that he wins. Talking about rigging the casino. So it's ridiculous. And notably, of course, the proposed rule would also ban event contracts related to assassinations, terrorism, and war. How much more obvious can it be? Like, these people are betting on who's gonna win and probably betting on contracts, assassination contracts, terrorism, and war. I mean, we live in a society that is so messed up, that is so fueled by money. How are you not, there's talk of simulations. This is not a simulation. The only simulation is that we're living in is it's staged by the billionaires who are doing these things, who are betting on things and paying for things to occur in society in which we live. And so this is so preposterous, but this is what fuels the whole market and what directs our lives, basically. So all of it is staged. So fear not, don't get your panties in a bunch, because everything you see, everything you live through is choreographed. Things are not fine. Things are not fine at all. On Friday, legendary investor Warren Buffett disclosed he sold half of his Apple stake, bringing Berkshire's cash holdings to an unprecedented $277 billion. And over the weekend, the information reported that the deliveries for Nova's next generation Blackwell AI chips will be delayed by at least 3 months due to a production flaw. Two major dings against large cap leaders in a market that had been priced to perfection just weeks ago. So this is another thing that is not going very well. I mean, when massive holders are now selling their assets in some of the leading companies, $277 billion, my lord. Fraction of that would save, thousands of people's lives. Nvidia's, everything was going to plan, and now apparently things are delayed. So I'm sure that has an impact on the market overall and the sentiment, and people's, money is probably being taken out because they're moving it into different assets as Nvidia's stock tumbles. Asset prices have continued to shrug off deteriorating economic data throughout 2024, with buyers optimistic that climbing unemployment and falling inflation rates are positive catalysts that would incite global central bank to loosen financial conditions through interest rate easing. Unfortunately, while the near-term arrival of interest rate cuts seems more inevitable than ever before, their historical impact during recessionary periods has been minimal, and concerningly, it is unclear whether the Federal Reserve can actually cut interest rates at this precise moment in an emergency attempt to stabilize the faltering monetary system. Then there is also Japan, which I also talked about yesterday, but last Tuesday the Bank of Japan was forced to raise its anemic short-term interest rate target from 0.1% to 0.25% in order to combat the yen destabilization and domestic inflation, placing immense pressure on carry traders who previously managed to supercharge returns on dollar assets by borrowing highly inflationary yen and bargain interest rates by squeezing both their net interest margins and yen short positions. At the core of the Fed's problem are the aforementioned carry trades. The arrival of interest rate cuts, particularly after the BOJ was forced to raise its own interest rates, would further compress carry trader net interest margin and structurally devalues the US dollar, squeezing yen shorts to place even greater pressures on long dollar asset positions. While many remain flummoxed by the move down in recent weeks, decisive indications of the downsides to come were visible the day Nasdaq topped on July 11th after the June CPI was reported to have slipped into deflation territory on a month-to-month basis, potentially confirming that the AI bubble has popped that very day. Investors rotated out of previously outperforming mega cap tech into underperforming small caps with historic vigor, and in recent days sell-side analysts at firms like Goldman Sachs have come to increasingly question the value proposition of AI technology as consumers cancel deals citing high costs and lack of results. Everybody was going gung-ho on AI, and of course it's a new new tech and still developing, so you can't expect results within months. I mean, it's only been a few months literally since AI came into forefront, and everybody expects things to just explode overnight, and that doesn't happen. Big tech has been comfortable blowing billions in computer chips, but the market appears to have recognized the unsustainability of this approach in the absence of astronomical profits, a fact which threatens to derail the AI lead capital expenditure cycle that predicted the bull market in traditional equities. The death blow has been dealt to incite total collapse of our contemporary economic system, akin to a cocaine-fueled rate seeking out just one more hit of stimulus. And although panic has fallen out of fashion over the past year, it may be time to prepare for the greatest recession of our lifetimes, one that combines the worst aspects of the 1997 Asian financial crisis, 2020 tech bubble, and 2008 global financial crisis collapses into a quite literally explosive package. So basically, this guy is saying that all of these, the 1997 financial crisis, the tech bubble, and the 2008 global financial crisis are just gonna merge together. We're gonna experience an event, not a singular event like those three, but one that combines the level of financial crisism like those three into one giant bubble. Now, that of course puts a damper on the idea that we're supposed to see a massive bull run coming up in 2025, and it also reaffirms the bogus that is spewed by most crypto influencers and most of the other influencers there, including Sailor, who keep telling you to buy at high prices whenever or at all times. I mean, these people are in the money, and then you've got the rest of the population following these dudes, these people, and throwing their money in. And of course, when you read articles like this, you know for a fact that these people have information that none of us do and never will. Not to mention the fact that they manipulate the markets in ways that that shouldn't happen, first of all, in a democratic state or in a democracy, but also in a way that controls the events and what occurs, what happens. It's getting so bad that economists are now urging the Fed to start cutting interest rates at a pace far faster than markets expect. Jeremy Siegel, professor emeritus of finance at Wharton School of Business, said on Monday that the Fed funds rate should already be between 3.5 to 4 to 1.5 below its current 5.25 to 5.5 target range. I'm calling for a 75 basis point emergency cut in the Fed funds rate, with another 75 basis points cut indicated for the next month of September meeting, and that's minimum. So people in the biz are freaking out. But I guess there's some up. Europe's fourth largest hedge fund discloses 500 million in spot Bitcoin ETFs. If they scooped it up right now at 49,000, of course they're happy, they're in the money. So if you did get in on those prices, then you're in the money. Hopefully this downturn and some more foreseeable ones will cause the markets to rebound, but things are not looking great right now. Data on Akram also showed that major holders of Bitcoin, including MicroStrategy, BlackRock, Fidelity, and Grayscale, have not sold their Bitcoin assets despite the market losses. So that's a good thing. Fidelity and Vanguard grapple with service disruptions amid crypto Black Monday chaos. Is your portfolio safe? Isn't it always the case that during times of turmoil, all of a sudden everything crashes? Systems are unable to be accessed. People can't access systems. Basically, trades are blocked. It's like whenever the market starts crashing and whenever something starts happening, if it starts going up, and certainly when it starts going down, all of a sudden everything is broken. Nobody can use anything. How predictable is it? Every single time this happens, that's the case. Down Detector, a platform that tracks service outages, reported a surge in complaints from Fidelity and Vanguard customers on Monday morning. Over 2,800 Vanguard users, nearly 4,000 Fidelity users reported issues accessing their platform services as markets plunged. The service disruption coincided, I don't think it's a coincidence, with major downturn in the cryptocurrency market, with Bitcoin and other digital assets experiencing substantial losses. I assume that people were trying to sell to offload their Bitcoin, and they weren't able because there were disruptions in the service. Like, it just happens every time. Don't give those people your money. So even Fidelity and Vanguard, these are the some of the Bitcoin ETF holders, and people give them, these VCs, their money, and these are the custodians of people's money. And whenever that happens, you've got people try to take their money out, and these guys are like, oh, sorry, we're having problems, you can't access the service, something's happening. Like, it's always the same. When you have a third party taking care of your money, you're not in control of it. And so when shit hits the fan, this is what happens. Crypto market's perfect storm can lead to further massive capitulation. A rapid decline in the traditional markets has spread to cryptocurrencies, obliterating them with a significant drop in all major assets. What are the possible factors for this perfect storm? On August 2nd, 2.9 trillion vanished from the stock markets, resulting in the worst day of trading since COVID-19 crash in 2020. But it isn't as low as it was in 2020, which means if we hit the bottom now, if this is the bottom, Bitcoin at $54,000 or $49,000, then imagine what the next stop will be in 2025, provided that 2025 is still on the plans. A significant factor behind this abrupt market shift is the Bank of Japan's decision to raise its interest rates for only the second time since 2007. Though modest in just 0.25% from its previous range of 0 to 0.1, the Bank of Japan increase has been enough to prompt a notable reaction in global markets. Since the 1990s, Japan has experienced persistent stagflation characterized by simultaneous rises in unemployment and inflation. To stimulate the economy, the Bank of Japan set interest rate to nearly 0%, which created a conducive environment for arbitrage known as the carry trade. Under these market conditions, a prevalent strategy involved borrowing money in yen, converting it into dollars, and investing it in assets like stocks, real estate, and cryptocurrencies to earn higher returns. The key to this carry trade was achieving a yield greater than the borrowing interest rate when executed wisely. This strategy could effectively turn into almost free money, leading many traders to adopt it. Japan's recent interest rate increase sets a new precedent for future adjustments, potentially aligning with the trend of other global central banks implementing record high hikes. While some traders may have managed to sell their positions in time to secure gains, many market participants may have been forced to sell in panic to cover their operation. So that's basically what happened. People were borrowing money for free, essentially, without any interest in Japan, and then investing that money into this, that, or the other, making bank, and then I guess not repaying the bank loans, which they should have had, but rather continuing invest. But so now, since interest rates have been jacked up in Japan, all of a sudden people are scrambling to sell what they have and repay those debts, because nobody wants to pay interest if they don't have to, right? But not all is gloom and doom and gloom. Trader who called the May 2021 collapse says Bitcoin setting up for fourth quarter fireworks. So this guy is saying that we might see Bitcoin at $74,000, and when you look at the chart, obviously we should be seeing bounce back. I mean, it's Bitcoin's broken below the trend line here, way below, but so it should bounce back. And if the trend is to continue, which we assume it might continue, we should see Bitcoin bounce back here and then retrace at least $69,000. That's what we should see based on the past data. The Bollinger Bands have expanded right now due to this massive drop, but if we follow the trend, we should see Bitcoin bouncing back up to $69,000. Whether or not it's going to dump again, that's a question. That's another question. We could see Bitcoin, since it dumped here, we could see Bitcoin go back up to, I guess, somewhere around 68, because I assume that this line is going to continue downward, this trend. Pardon my drawing here, but we should see Bitcoin maybe bounce down here, somehow, maybe not in this fashion. We might see Bitcoin do one of those, prolonged and then bounce over here, maybe 66, and then who knows, go down. But we should see it bounce back up, maybe. The way markets are looking right now, who knows what's going to happen. So according to his forecast here, if we're going to draw a trend line, I guess would be like, so based on this line, I guess the prediction is that Bitcoin should bounce somewhere down to here, maybe these limits here, and then rebound. So we might see a Bitcoin at $42,000. That was the prediction I think the guy was sharing with us right here at the highs. So we've got Bitcoin quite possibly going down to here. In any case, you know, it's hopium. We don't know what's going to happen. Absolutely no idea. But so this guy is hoping for fireworks. But so things are not looking too great right now. I guess we're going to have to wait and see what's going to happen to Bitcoin. On the weekly, let's have a look on the weekly. On the weekly chart, we are in the red. On the monthly, I mean, it's definitely a red month, and it's definitely going downwards. And where will we see Bitcoin proceed from here is questionable. But yeah, sorry to bring in this FUD, but I think just based on this chart, we should see a rebound for Bitcoin for now, and quite possibly go back up to 67,000 or somewhere in that vicinity, hopefully within the next few weeks, and do some recovery, because at these low prices, you bet you're behind that the gamblers out there will be throwing that money back in to get some more profits for themselves. That's it for this doom and gloom. Make sure to smash up the like, subscribe to the channel. Sorry to leave you on a uncertain note, but that's markets, man. They go up, they go down, they go round and round. We have no idea where they go. But what you can do is let YouTube know that not only big YouTubers, not only big channels should be seen, and make sure that these notifications get pushed out to my subscribers. For some reason, they are not getting that, and you know, share it with everybody else who you think might be interested in watching this stuff on the Crypto Father channel. Thank you for tuning in, and I will see you in the next video tomorrow. Peace.